Hey, it's Giuseppe with Zenith Home Loans. So I'm talking to a lot of clients recently where, of course, with the extreme shortage of inventory of resale homes on the market, a lot of people are considering new construction homes. So there's a couple things that sometimes I hear back from clients. Maybe the new construction lenders don't explain very well. And so I wanted to do a video just to kind of talk through some of the things that I normally talk through when someone is considering new construction, just to make sure that they are aware of the potential things that could change. So first and foremost, you cannot lock in an interest rate on a new construction purchase. Typically, you can do there are some long-term rate lock options, but they're super expensive, usually non-refundable fees. So usually not a good option for most people. So traditional loans, you wouldn't be able to lock in their interest rate until about 60 days out from closing or so. So if your construction is a year delayed, you're kind of at the mercy of what the markets are doing. So the second thing are the property taxes for new construction tend to be a lot more expensive. So let me show you some numbers that I built here so we can take a quick look at that. So let's say today you're looking at buying a resale home. Rates have moved up pretty quickly. So let's use a 3.625 rate, 550 purchase price, 5% down payment. You're gonna have about a $2,900 payment. You need about $34,000 to do that. If you go to a new construction lot, typically with property taxes, we're told to estimate between 1.2, 1.3%. I've heard a few that are even higher than that and a few that are lower. But for this example, let's take the same $550,000 home and assume you can get today's interest rate. You can see that your payment, because of the property taxes, which go from an estimate of $250 a month to almost $600 a month, the payment goes up about $250 or so. So if you're okay with this higher payment, you can actually, so if you're okay with the $3,277 payment, you can actually go buy a resale home, not at $550, but at $625 at today's interest rates, and you end up with that same payment. So something to consider. It's always, you can buy a lot more house resale than you can on a new construction because of generally, most of the time, the property taxes being so much higher. Okay, so now the other thing to consider when you're looking at new construction is, what if interest rates continue moving higher, right? So we always run through some examples with our clients. What if rates go up 1%? Okay, so they're locking in the price, which is great. So even though you may not close for a year, you're getting today's price on the house. But if rates move up another 0.5%, now the payment's going to be about $34.27. So it's going to be another couple $100 higher even than what it was at today's rates. So that with the higher taxes, you end up with a $500 higher payment than buying a resale home today. If you're okay with a $500 higher payment, you can go buy almost $100,000 more purchase price today. So I'm not saying one way is right or wrong, but it is important to know those numbers and understand them so you can make the best decision and you're not surprised at the end. If you have any questions or need anything, feel free to reach out. We're always glad to help. Talk to you soon. Bye-bye.